Okay. If they are a companion. These two. Right. Okay, Luis, can you hear me? Okay, let me use your earphone. Like, Olaluwaju, welcome. Can you hear me?
Yeah, I can hear you. Good evening.
Good evening. Amazing. Starting. Linda. Linda, welcome. Okay, Luis. Okay. Luis, welcome. Can you hear us? Yeah, Linda, can you hear us? Can you hear me? Welcome. There's a place to unmute your mic. Linda, how are you? Okay. All right. It's time. Let me share my screen so that we can get started. Welcome everyone. This and first of all, Happy New Year. Welcome to 2026. This year we are staying locked in. We have already started and we are ready to win big this year. And anyone who is ready to win big with me and you are very active, you will learn, you will win, you will execute and you will win. And the more you learn, the more you earn. The more you learn, the more you earn. So don't look at anybody. Just focus on your part. Put in the work. I will make today's section as clear as possible. Today, the topic is a deeper understanding of structure, range, and POI using RBS and SBR on 4 hours time frame. So it's what we discussed the last time, but now I'm going to go deeper into it and explain certain things to you guys, and that's it. And then we look at chart examples. So let me share my screen. Share your screen, entire screen, yes. Mhm. Okay. All right. Can you guys see my screen? Can you see my screen? Can you see my screen?
Yes, I can see your screen.
Awesome.
I can see it. Yeah.
Okay. All right. So structure. So for those who say that they do not understand how to mark RBS and SBR, okay, okay, I want to even open our Telegram. I want to open an important picture from MNSR book. Yes. So can you see this? Can you see the image on the screen? Yeah. Can you see the image on the screen?
Yes, yes.
Awesome. So this one is SBR. This is from the MNSR ebook. So what happened here is that price closed below this low. And after price closed below this low, it pulled back. And I'm going to, in a short while, tell you guys why price must pull back to peak and order before it sells. So, and look at where they marked 50% is where they marked that price will pull back to before the sell will start. And if you look at the 50%, you see that it wicked even beyond the 50% to 0.6, 0.7%. And then after that, price is going to now go down. You could see the range. This is the range. This is the high, the low of the range. This is the high of the range. Your SL should be here, and your objective target should be here. This is the low of the range. Your objective for those who don't know how to market. And where is the SBR? The moment this candle broke this low, we're going to look at the chart because sometimes it's not one candle that it will break. It may be a different series of candles, different support a rate of candles that form the support here. This is a support in your price ball from here. And this is, so this one is RVS and price pullback, and then it's going to sell and is going to now break this. Now this is, yeah, this one is SBR. This is for sell. SBR price pullback is going to sell and break below this. Now this is RBS. This is for buy. Price broke above this high, and but you don't chase price. Price is going to pull back. You could see where they marked the 50% that they marked, the price pull back, and you could see that price even pull back below the 50% to 0.6, 0.7. And this is where they wrote that the actual buy will start. The actual buy will start. So I said, let me just point this out. And let's go back to the charts. Now, this is so okay, so let me this pair is British pound Japanese yen. British pound Japanese yen. It's bullish. It has been bullish. All right. Okay. So the pair has been bullish for long. You can see it has been very, very bullish. But then if you come here, you see something happened because this RBS on 4 hours is not just for creating a trade. It changes the structure of the market. When market is, it can change the immediate structure of the market, not the general structure, the immediate structure of the market, and they eventually change the overall structure of the market. So you could see what happened here is the moment price broke this low, the sell stopped. The moment price broke this low, the sell stopped. So price was buying, buying, buying. The first time he tried to break the low, there was no liquidity grab. And that's why I said, you should pay attention to liquidity grab. There was no liquidity grab. This red candle did not sweep the low, the high, and it did not break below the green candle in the body of a candle. But the moment this red candle swept the green candle, it meant that sellers were now in control of the market. And to show that sellers were in control of the market, we now have this low. So this is an SBR. This was when SBR happened. And this SBR that happened caused a market structure shift. When it happens so when you have a trend when you have a trend, a bullish trend, and then SBR happen on 4 hour, a complete that breaks all the low, you have a market structure shift. And that market structure shift now change the trend from bullish to bearish, meaning that you should no longer be looking for buy. The current bias of the market is bullish, is now bearish. So you should not be looking for buy anymore. You should be looking for sell. And so you mark your range. So for those who don't know how to mark a range, this is how to mark your range. This is Fibonacci. This is the high of the range, exactly the high of the range. And this is the low of the range, of this particular range. And what did price do? Price came to 0.6, the space between 0.6 and 0.7. That was where price came to. And this is the objective target, and price hit the objective target. Price hit the objective target. As if that was not enough. That's why if you get your objective target, which is mainly 1:3, 1:4, on lower time frame is a high error. If you get your objective target, come out of the market. Market will keep giving you setups, because most times after price gives that objective target, it goes up again. That does not mean that market is bullish. Market is still bearish. Market is still bearish. So what happened? Market bought again, came to this place again, and could not break above it, showing that the trend is still bearish. And what happened? Another liquidity grab. Another liquidity grab. You have a red candle that swept the wick of a green candle. You have a red candle that swept the wick of a green candle. However, this one, I will not advise you to take this trade, because we did not really break below. Yeah, this one broke below. The body was lower, but you could see that the wick covered it. It came back up to 0.16, and so this one, the structure is not clear. However, this particular one, the structure is clear. So the question now is, why do market pull back? Why do market pull back after doing an SBR or RBS? Why do market pull back? One, market pulls back because market is seeking three things. Market is seeking three things. One is an imbalance. It wants to rebalance an imbalance. So as it was doing this, it left an imbalance. All right, it left an imbalance, and that imbalance was what it went to fill. And then after filling it, someone is talking. If you are the one that your background is noisy, mute your mic. So after filling that imbalance, it went down. Two, fair value gap. When market makes this kind of massive move, it leaves a fair value gap. It leaves a fair value gap, and mainly on the daily and 4 hour time frame. And the MLS has said any market that we sell, we start by buying. Any market that we sell, we start by buying. So this market, of course, is a bearish market. It started by buying. It was actually buying to the sell zone. It was buying to the sell zone to get what it was looking for, because market moves because of liquidity. So it was buying to the sell zone to get what it was looking for. And it came to that sell zone, and the actual sell started. Because every other thing, any sell before the actual sell is inducement. Any sell before the actual sell is inducement. On the lower time frame, it is inducement. All right. And the third one is, of course, an unmitigated order block. To fill an unmitigated order block, an unmitigated POI, an unmitigated order block, illiquidity. All right. And that was what it came to collect. And then after that, the real sell started. After that, the real sell started. So basically, on 4 hour time frame, so after this, because this is a bearish, because this is a bullish, this was formerly a bullish market, and then this happened and it became bearish. Market structure shift. This one now was supposed to break. Now the break was supposed to now be a break of structure, but it did not. If it has broken this low with the body of a candle, it would have been a break of structure, and that break of structure will even confirm that, okay, the sell will continue. But it didn't do a break of structure. It did not break the low with the body of a candle. It swept it. Probably it will do it. So we would like to see what will happen next week. If this candle closes above, it will do an RBS and the buy will continue. But if it breaks this low, means that the sell will continue. So the current market bias is dynamic, but the overall bias of the market, that one can last for 2 months, 3 months or more. So let's come to derived trading view. I want to show you guys something on this 50S. So this is this. Let me come to this 50. So this 50, if you look at 24 hours, if you want to know the bias of the market, ask yourself, what is it breaking? Is it breaking support or is it breaking resistance? On 24 hours, you could see that it's breaking resistance. It kept breaking resistance. It kept breaking the highs. It kept breaking the highs. The highs is the resistance zones. It kept breaking the highs. It kept breaking the highs. It kept breaking the highs, which means it is bullish. It is bullish on the higher time frame. It's bullish. It's currently bullish. It's generally bullish. It's bullish on 24 hours. So you should be looking for bullish setups on this 51S. All right, so let's go to, but daily is not, daily gives you bias where you will now trade, where the time frame, daily is too slow, daily is too large for you to trade it directly. The one you can trade directly is you confirm your structure on 4 hours, and you can you can trade from 4 hours directly, or you go down to 15 minutes and enter and take your trade. All right, so let's go to 4 hours time frame. And this is 4 hours. And this one just played out on Monday. So let's mark it and find out what happened here. Okay, this particular one, okay, this one, you will see that this one, there was no liquidity grab. So I won't enter this trade. And it did not even break above. But this particular one, there was a liquidity grab. All right, at least let the green candle do the sweeping. The green candle swept. It swept, and not just that it swept even this green candle, all the candles here were swept. And what did it do? It broke above with the body of a candle, RBS. So I will mark this. It broke above all this resistance with the body of a candle. So what matters here is the body, not the wick. So you mark your range, this particular range, not this one. So we'll have to start from here to here. This is the high of the range. This is the low of the range. So let me mark the range. So the high of the range to the low of the range. So the high of the range, this is the high of the range, and this is the low of the range. And what did price do? It came to 0.7. It tapped 0.7. So your SL should be here. It tapped 0.7 and it started buying. It started buying. And this is the high. It delivered. It delivered on Wednesday. Delivered to the high on Wednesday. And now and now what has it done now? It just did that. It just created another structure. And what I like about this is there's a liquidity grab. A green candle even swept the wick of a red candle. If you look at it very well, you see it. So a liquidity grab, and it cleared above this high. It did not sweep this one completely, but it swept this one. Swept this one. So this is RBS again. So if you mark the range, so let me mark this range. This one has not played out. Anything that is happening here is inducement. So this is the high of the range. If your Fibonacci shows you that this, start it the other way, so that that 0.6 will come at the pullback area. All right, so this is the high of the range and this is the low of the range. All right. So we are waiting for price to come here. All right, we are waiting for price to come here. And when price comes here, and that's where the main buy will come, we start. And if price does not come here, you leave it. If price doesn't come here, you leave it. So that's it. If price doesn't come here, you leave it. So let's go to EU. All right, so this is EU. I want to show you something that happened on 30th of October. So this is it, 30th of October. So this was the day the day that rate cut was announced. Rate cut was announced, I think, around this time, 30th of October, and then EU was bearish. You could see that there was this liquidity gap here, and EU sold massively, created this low. Already did an RBS here. Okay, he did an RBS here. Let's even mark that one and see what happened. Interesting. Hmm. So yeah, Fibonacci, I've chosen this. Hmm. So the high of the low and the low. Interesting. This particular one. Okay. So that's the high, that's the low. This one came, just touched it barely, just touched it. So the thing is, if market, but it has every other thing we're looking for. It has liquidity gap. It has it broke all the lows here, It just touched, just slightly. I think, yeah, it touched it. So let me mark this. Sometimes a market may not give it to you. Some people will say 4 hours takes time. Sometimes in a week, it may give it to you once. Sometimes in a week, it will give it to you 3 times. It will give it to you on Monday, Tuesday, Wednesday, like what EU did there. So what I like about this one is that it broke all the lows. SBR. It broke all the lows here. And then it just touched the 0.16%, and then it started selling from there. Just touched it and started selling, which is massive. It started selling from there. The liquidity grab, so there must be a liquidity grab. That liquidity grab makes the zone a protected zone. It makes the zone a protected zone. And so a lot of people were waiting for market to come back to this zone and sell from here. Even lower time frame people, because on here on this zone, you have SBI. What I mean, SBI sweep break inducement on the lower time frame. You have disruption. You have what Abigail teaches is here. It formed there and it was waiting, and price did not come there. Price came to this 0.16, and that was where it stood. And this happened from Thursday, prayed out on Tuesday. And if you think you missed it, after it prayed out on, if you think you missed it, price gave another structure again. So let me mark this. So if you look at this candle, you will see that there was a liquidity grab here. So this red candle swept this one. And we want to now confirm. So price already, so if market is buying and then it does SBR, it means it has caused a market structure shift. All right. When price comes up to where you will sell from, that one will that one will take it to the low, where mainly it will weak into it or it will do break of structure. If you breaks below it, it has done break of structure. It means basically the trend is continually bearish. But if already, because this one was buying, if already market is bearish, if market is bearish, then every time it does RBS on 4 hours, it's break of structure. So it keeps giving you that setup. There's no need for change of market structure shift again. Market is already bearish. You keep waiting for your sell zone. Vice versa for bullish. So let me mark this. So there was a liquidity grab here, and after that liquidity grab, what did price do? Price came here and broke the low here. So that is, even if you miss the other setup, you will still not miss this one, SBR. Can you guys still hear me? Can you hear me?
Yes, yes.
All right, so this is SBR. Price confirmed that it will. So let me mark the range. So this is the high of the range, and this is the low of the range. This is the low of the range, yes. Exactly. So what did price do? This one even came close to, it came into 0.8, 0.7, 0.8, and that was where. So if your SL is here, you are protected. There's already a protected zone here. And if you go on 2 hours, you see it, you will see a large wick there. So your SL is there, and this is your target, and it came. And not just after that, what did price do? He kept selling, kept selling, kept selling, kept selling, kept selling, which is massive. Kept selling, kept selling, kept selling. So this is how you mark the range. Now, there was another setup he gave, but it did not really work. So after price broke this low, it came here. And if you mark, but there was no liquidity grab. So here, there's no liquidity grab. In this one, no liquidity grab. This one also, price broke this low and came up here, but there was no liquidity grab. It's this one that worked, and then this pullback. So you have to pay very, very attention. Those ones are B setups. Of course, people take B setups, but I would say, to survive in the market, take only A setups. You only take B setups if you have extra confirmation, extra lower time frame confirmation, extra lower time frame setups. If you have extra lower time frame confirmation. So let me turn on Louis dropped a video on how to turn on your Nifisam indicator. Watch that video, and you so that you can be able to turn on your Nifisam indicator, because most times that 0.6 is where you have the fair value gap. Is where you have the fair value gap. You will see a fair value gap. Their price is coming to tap into that fair value gap before the sell happens. And now let's look at the buy. Let's look at the buy. So what I like about this particular buy is there was let me start from the one that happened here. So in this one, yes, this one happened and price book above, but I did not see a liquidity grab. The buy candle was supposed to do the sweep, and that was why a lot of people were, this here, the price action was not clear. A lot of people were, thinking that market will keep selling, but not knowing that market was reacting from the one here. So let me show you this one. So this one actually was being played out by the one here. So you can see the liquidity graph here. And if you mark that, there was okay, let me mark this. And this one is a long range, and it makes this very, very interesting. You can see the liquidity graph here, and this particular one is a long range. You have simple ranges, you have even more bigger range. And price was very clear that it will buy. It broke all the resistance, RBS. It broke all the resistance. And look at the fair value gap here. Look at the fair value gap here. That's from Nifty Sam. So let me mark the range. So if I'm to mark the range, this is how I'm marking. This is the high of the range, and that's the low of the range. So let me mark it to this side. And what happened? Price came to 0.8. So if your SL is here, price came to 0.8, picked it. It's a long range, and then it even hit the target when it came here. Hit the target when it came here. So this one, you don't even have to worry. This was where price was even coming to pick the other. It kept having a lot of rejection at this zone, at this Fibonacci zone. It kept having a lot of rejection, and eventually it started buying. And after that, let's say you wanted to take a trade here. Maybe you didn't see this one. You wanted to take a trade here, but you did not get what you are looking for. There's no liquidity grab here. You wait. Price will give you another opportunity. And that was what price did here. So for buy, I said the green candle must be the one doing the liquidity grab for buy. And for sell, the red candle must be the one doing the liquidity grab. So a clear liquidity grab at a 4-hour fair value zone. And what does it mean when price does a liquidity grab at a fair value? It means that price has mitigated this zone. Price has mitigated this zone, and this zone is protected. So, and where the price confirmed that it was buying. So when price closed above all the resistance, price closed up above all the resistance, all these candles, you can see price closed above all of them here. So RBS. So you mark your range. From here, this is the low of the range, and this is the high of the range. And what did price do? It came to 0.8. So your SL is below. That's why your SL, ideally, your SL should be below. And there is a lower time frame setup here that price picked. It came here and it picked other, and this was the target, the objective target, and it delivered the objective target. Delivered the objective target. Amazing. This one is a B plus setup. The buy did not do the sweep. It was a sell that did the sweep. It prayed out, but it was a B plus setup. This one too, the buy did not. This one, you could say that the buy eventually did the sweep. Okay, the buy eventually swept, did the sweep here, but this one, price did not come. Even though there's a fair value gap here, which many people were expecting for price to come, and this is a 0.6, 0.7 zone, price didn't come here. And what did price do? Price use another. So you have to be observing the market. If you miss a trade, price may give you another. Price will always give you another setup. And what did price do here? There's a liquidity grab, and it is very bold. A green candle that swept a red candle, a liquidity grab, and price did that. And what did price do? So it broke above this. It broke above all the resistance here. So first of all, know your structure. This is a bullish structure, so there's no need for change of market or anything. Market is bullish. Market has been bullish. So since then we've been choosing bullish structures. Market, in a bullish market until market takes out the low, which it did not. So market kept, in a bullish structure, like I said, how do you know market is bullish? It is breaking the highs. It is breaking the resistance. It's breaking the high, and it is respecting the support zones. So price broke this, and this is the protected zone. And see what I said? The protected zone, price tapped the fair value gap. Price tapped the fair value gap. It tapped the fair value gap. People were expecting, sometimes price will tap the fair value gap, and that's it. It tapped the fair value gap and and protected this zone with this massive liquidity grab, this sweep. In a buy trade, the green candle should do the sweep. In a sell trade, the red candle should do the sweep. So it did that, and after doing that, you mark your range. Some people don't know how to mark that. This is the high of this range, and before the actual distance plays out, when you have to wait until the range for the two range. Sometimes You may be thinking you have missed your trade, not knowing. Like someone that marked range here, someone that marked a range here, the person will be crying that it didn't come here because what? Price came to 0.5, but the range has not ended. So price kept buying, and this was where the range was complete. And what did price do? It came to 0.7, came to this place. It was using this place as support, and it eventually delivered to the target. And this was the target. And like I said, when now do you know that price is bearish? When do you now know that price is bearish? When price, when you have a liquidity grab and then price closes below the lows. So the first time it happened was here. Price closed below all these lows. A massive liquidity grab, a red candle did it. So it temporarily changed the bias to bearish. It changed the bias to bearish. So this caused a market structure shift. And if price has broken this low, it will have been a break of structure. So let me mark this. And it, you could see that price was reacting at a fair value gap here. So this is SBR. This one is SBR. So this was when the trend changed from bullish to bearish. But let's mark and see if this thing met our confirmations. So if I mark this particular one to this is the low of the range. It did not meet, it did not come to 0.6. So you are waiting for. So if you don't get it, if it doesn't come there, you leave it. Price will give you another confirmation. And what did it do? It came here and gave you another confirmation. This one, we have said, okay, this is a liquidity grab, but it did not break below, and that was why it bought up again. It didn't break below, it kept buying. Came here and did a liquidity grab, a red candle doing the sweep. So you mark your range. And then here it did the break. So this was where it did the SBR. It broke below the low, showing that market will sell. So you don't chase price. You mark your zone. You first of all know the structure. Now structure is bearish. The next thing you do is you mark the range. This is the range high on 4 hours. This range is not small. If you go to 1 hour, you see how big it is. This is the range, and this is the low of that range. This is the lowest level it got to before it started retracing. And what did price do? Price came to 0.6. So if your SL is here, you are protected. It came to 0.6, pick it order. And this is even the low of the range. It delivered. And it kept selling since then, And not just that, gave you another setup. This one is the first one, delivered. This one did not do a liquidity grab, so you leave it. This one did not do, but this one did. This one swept. It swept a red candle, but it did. So if you mark this, it did a break here. So this one did a break here. Broke all the lows there, because here it was ranging for hours. You broke all the lows, and so you mark your range again. You mark your range again, and what did price do? It came to 0.6, it touched 0.7, and it sold, and this is the target. This is the target. Can you mention a pair I should check? Mention a pair I should check. Someone in the section. Mention a pair I should check.
Probably GBP USD.
It's similar to EU now. I think it's meant to mention that one. That one plays it out very, very well. GBP USD. Okay, let me do that. GBP USD is similar to G. It plays it out very well. So when it was buying, let's look at what happened there. Did you see this massive liquidity gap? That liquidity gap always even happens on a fair value gap, showing you that price has mitigated the fair value gap, and it will no longer come there. I see that a lot of people have lower time frame. I trade SBI on lower time frame, and I'm going to talk about it. A lot of people have lower time frame SBI setups or disruption on all those setups, and when they see this, they are waiting for price to still come back here, which they call the dove, the disruption. For price, once price has swept it, it's not coming back there again, and that's why this range, this structural range POI helps you gain clarity, helps you know where price will come to. So what did price do here? This was where for me it finally broke above all the resistance. I don't want to mark the week. I want to mark where it broke above it clearly with the body of a candle. This is RBS. This was when it was bullish. Of course, this pair is generally bullish, and this is the low of the range. So let's mark. So and see if it met what we are looking for. This is the low of the range. This is the high of the range. So this is now the high of the range. Are you seeing my chart? Are you seeing the chart? Are you seeing the chart?
Yes,
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 we're
yes.
seeing it.
So price came to 0.6, pick the order, not here. So all the people that were expecting buy here, this place has been mitigated by the liquidity grab. Like I told you guys, price does two things. It is always seeking to get liquidity, and once price has gotten liquidity, start going the other way. ICT calls it buy side liquidity, sell side liquidity, and of course we have transactional liquidity, inducement liquidity, and all. But I'm talking about the two general, types of liquidity: buy side liquidity and sell side. If price gets a buy side liquidity, it will start. The moment price has gotten buy side liquidity, start heading to the opposite direction to go and get sell side liquidity. Basically, price moves from supply to demand. When price gets the liquidity at demand zone, it will start buying and to go up to supply zone. When it gets the liquidity that is looking for a supply zone, it will start selling and go. So that's, price moves up and down. It gets liquidity. But the second main reason why price is moving is because it wants to rebalance an imbalance. It wants to rebalance an imbalance. There's an imbalance he left as it was doing this RBS or SBR, and he wants to correct that. He wants to rebalance it, and that's why it must come back. Price doesn't just move on a straight. It doesn't just keep moving up, up, up. It moves up, it moves down, it moves up, it moves down. So that's, so he did this and making it a protected, a protected zone, and it broke here and came back here. And this was, so all the people trying to buy here, these are inducements. All the people trying to buy here, price keep them out. And this was it when it came to 0.5. That's why I said don't buy from 0.5. Wait for price to come to at least 0.6. And then you can go to 15 minutes. You will see the same liquidity gap on 15 minutes. So let's even check something here. And this was on 2nd of December. So 15 minutes time frame. All right, we've gotten there. Because 15 minutes is a time frame that correlates with is a time frame that most people use for entry. If you get what you're looking for in 4 hours, if you want extra confirmation, you can use 15 minutes. So here, you will not enter here because it did not do any sweep. But here, it did a sweep. It did a sweep here. It swept the red candle. It swept it. And then since then, it started buying. So if you're looking for extra confirmation, you come down to 15 minutes. The moment you see this is a CRT. The Chris calls this a CRT count. The moment you see this, there's one guy called Malo. This is exactly what he does. Once he confirms the structure, it comes to 15 minutes, takes his end. The moment you see this, and this is actually at the zone. You see the line, the 0.16 line. is 0.6 line, exactly at that zone. Price came exactly at the zone, did liquidity grab, and started buying. Sometimes some of them that wants to come to 0.7 is at 0.7 that they will do it. Wherever it does it in that zone, 0.6, 0.7, 0.8, you enter. But your stop loss will not be here. Your stop loss should be the low of the 4-hour range. And your target should not be the high of the 15 minutes. Your target should be the high of that 4 hours. Your target should be the high of the 4 hours. So, and price delivered to target even that day. Okay, the next day, price delivered to target the next day and kept buying. Kept buying. And it did not come back. A lot of people were expecting it to come back. It didn't come back. So what did price do? So let's check again what price did. So there was no, was there a liquidity grab here? Let me see. There was no liquidity grab. There was no liquidity grab. So this is a B plus setup because after it broke above, it came back to 0.6, 0.7, picked order, but there was no liquidity grab for the buy. So you leave it, you will get another setup. The same thing here, no liquidity grab. The buy candle should be the one doing the sweeping. Of course, B setups they work, but there's a reason why they are called B setup. Because one day they will fail you. All right, the A plus A setups, no setup is 100%, but the A setups are above 80% win rate. The thing is that market will eventually give you what you're looking for. It did a break here, but no liquidity grab, so you leave it. But something interesting happened here. When market came here and broke below this low, the trend changed. It caused a market structure shift, SBR. The trend changed. It came here, there was no liquidity grab, even though it broke the low. That's why it kept buying. That's why you should not that's why I say you should not do a B setup. Because for example, now someone that was trying to do this equal high, the person will be waiting for sell here and price will take the person out. That's why I say always wait for liquidity grab. So when price finally did the liquidity grab here, it broke this low, giving us an SBR. And let me be clear that it did a liquidity grab. You can see the red candle swept the green candle, ending the sell and confirming that the sell, sell has started. It broke the low, so you mark your range. You mark your range. So this is the high of the range, and this was when the sell stopped. This red candle was when the sell stopped, and price started pulling back. So this one came to 0.8, came to 0.8, and it was at 0.8 that it tapped and then sold. It did not break below with the body, but it got there. Price got there. So when price gets there, you come out. So let's mark this base and go to 15 minutes to see the confirmation it gave us. So let's say you are waiting for confirmation whether to enter at 0.6 or with price to keep buying. So let's mark at the range where price tapped. So this was on 26th December. Wow, not just last week. So let me go to 15 minutes. So even if you entered sell here, you will still not price, as long as your stop loss was at that high, price will not still kick you out. So you see all the confirmations that price gave, and you could see the liquidity grab. It did it here, so it did it here. So exactly at this place. So all right, give me another pair.
Can we use derivative, like derive?
Yes.
Okay. Can you test what's called VIX 31S?
Okay, this 30S. This 30S sold here, came here to buy, picked order, is currently buying. Okay. So let's start from here. Okay. Okay. Hmm?
Sorry. Let's see.
All right, can you hear me? Can you still hear me?
Yes, yes.
Yes, we can.
All right, can you hear me? Can you hear me?
Yes, we can. Yes.
Okay, so this is the 30S. So let's start with this. Start with this one. So okay, let me start with this. This one it did a liquidity grab. You see, it did not break this high, but it broke here. So let me even mark this range and see what it did here. This one came to
You all
100%
lie.
retracement. So
You,
you can
you
hear me.
lie. You.
You can still hear me. Can you hear me?
Yes, yes, yes.
All right, all right. So RBS here. But didn't break the rest of the high here. Did a liquidity grab here. So let's see what it did. So if I'm to mark the range, this is the range, and this is the low of the range. Okay, let me mark it. Your stop loss, this one came to the full, it did a full retracement. This one did a full retracement. So if your stop loss is still below the range, market will not hit you out. So, and then it got to the target. It got to the target. So let's look at the others. This one played out, but no liquidity grab. It came to 0.6. Let's look at this. The high of the range. This is the low of the range. This is the high of the range. It did not do a liquidity grab. This is a big setup. It broke above. It broke
And
above
get
here.
too many people where they take free well. Who score?
It broke
They
above.
get plenty where they play better free kick.
Who is talking? Someone talking about football in the live section. So
But this year now, World Cup year.
it broke above with the body of a candle, and then it came to 0.7 to pick out that. In fact, basically, it's been using this. It's been using this, and every time it comes to that place, it buys and it delivered, but it did not do a liquidity grab. This one too, the liquidity grab broke above. This is why I said your SL should be below the range. Give it a space below the range. I said it came to the 100%. It did not break below with the body of a candle. It didn't break below the range body of a candle. It broke above here. It delivered to target. So, and when it was selling, what did we have? So let's look at this. It did a liquidity grab here. It broke below the body of a candle here. SBR. Liquidity grab. So let's mark this. So you will not use this. This was where it started, and this was when price finally broke the low. So this, which means this is the high of that range. So if I mark this, high of the range, the low of the range. This is the low of the range. This is the low of the range. Before price retrace, price came to 0.7. So let me mark this 0.7. This was on 8th December. see what it gave us. Let me mark it and see what it gave us on 15 minutes time frame. For someone looking for extra confirmation on lower time frame. So, and it delivered to target. This is the target, the objective target. So in December, right, we have 10. So at that zone, did here, even though it did not do here, it did here, and probably if you go to 10 minutes, you likely see liquidity grab. So 10 minutes did that. 10 minutes gave us what we are looking for. So 10 minutes swept it. 10 minutes swept it. And after that, the sale started. So 10 minutes, 15 minutes. So let me expand this. Okay. It's December. Move this. No liquidity grab here, even though it played out, it broke low, came out, but no liquidity grab. And this one is interesting. So let's look at this longer range. There's a massive liquidity grab here, meaning that this place is protected, and price broke this low, but it kept breaking lows until it broke the final low here. It broke, okay, it broke even more lows here. Okay, I'm seeing wicks and all of that. But we can use the one at the top. SBR. I like where it is confirmed. It has actually confirmed what it wants to do. So you could say even here, the red candle here broke all these lows, and of course the sell continued. So you have to look at the range is where the sell stopped and where the so you look at the range. So and what did price do? Came to 0.7. In fact, using it as a resistance. And that was where I picked up that on 1st December and delivered on 4th December to the target. This is a long range, and this will give someone massive aura. Alright, so it's 30s. Same thing here. So let's look at this. Did the liquidity grab here, a sell candle did the sweep, and after that, I like this, it broke this low. In fact, it broke all the lows here. Finally here. Was not market to this low, but this is where to show it broke all the lows here. The moment this one even broke below, it confirmed SBR. But this is where it broke even all the lows, showing you that market is really selling. Market is really selling. So you mark the range. So let's mark the range. So this one. So we are using this one, not this one. We're using this one. So this is high of the range. This is the low of that range. And price came to 0.8, picked order, and got here. So it will give you 1:3, 1:4. It will give you, this is from 6,987 to 6,758 over 2,000 pips. Then you come out because price gave other setups here. You must not wait for it to do the full one. But okay, you must not wait for it to do the full one. Okay, mention another pair. Synthetic. Mention another pair on synthetic.
VIX 75.
75. Okay. The 75 has been selling quite some time. It has been selling. And look at what it just did here. The liquidity grab and broke all the lows here, confirming SBR. So if you mark the range, you should be expecting sell. Is from here to here, from this zone to so. Basically, if your SL is above here, you say if your SL is here, you're okay. You can just once you get 1:2, 1:3, or get your target, you come out. Here, of course, it's been playing it out, but it's not. It didn't do. This is a big setup. Broke these lows, came to 0.6, sold, but no liquidity grab. Did the same thing here, broke, came to 0.6, sold, no liquidity grab. This was where I did a liquidity grab and broke below this particular low and broke below this low. So let me mark this SBR. It finally broke below this low. So if you mark the full range, so this is the range before price pullback and price came to. Okay, that's the range. This is the high of the range, this is the low of the range. So this is the target. So price came to 0.6, picked order, even did another liquidity grab. It came to 0.6, picked order and sold. Picked order, sold. Picked order, sold. So and here, so you should be observing what price is doing, even as when you are in a trade, and you should find out the pairs that work well with it. So when you know that the higher time frame is confirming that market is buying, you should only enter buy the buy setups. When it is selling, only enter sell setups. It's been, here I became bullish, it came here, wasn't really doing liquidity grab because it's showing a bullish structure, but it was still selling. Here it's going to sell. Going to sell. So the pair, and it gives confirmation. This pair gives massive confirmation on lower time frame. Gives confirmation on lower time frame. Here I did a liquidity grab, but it didn't come to. It came to less than 50%. And this is what is shocking. Okay, this one did not do a liquidity grab, but it came. If you check this range, let me mark it. That is what is shocking. So if I mark, if this is the low, to 0.7, as I said before, did it break the high? Did not break the high. That high, that fair value, that Fibonacci high is still acting as resistance. It's still acting as resistance on this pair since November. Since November, still acting as resistance, which means it's going to sell. It's going to sell and deliver. It's going to sell and deliver. Interesting. So the pair, yeah. This one did the back, it broke the low, did a liquidity grab, broke below. So if your stop loss is here, you're protected and delivered. Delivered. And this one is like it did 50%, it did a liquidity grab, broke the low, and then so let's mark the full range. Wow. Liquidity grab, broke the low completely, came to 0.6, peaked order, and it delivered. So, of course, the 25 is a pair that respects structure the most, and it does it all the time. It delivers it all the time. So, I don't even need to mark it. I will just be showing you liquidity grab, broke above. This one came full. Okay, first of all, it played that liquidity grab, broke above. So let me mark this. Played that actually before it came back. Liquidity grab, it broke above here. It broke above here. This particular one, it broke above here. Came to 0.7, and then the moment it got to the target, it says and this one you could see say if you are to use this, and then this one broke above, so you are using this whole range. This one came back to this place, so your stop loss is still protected, and it bought to this level. Liquidity grab, broke below. So what I'm expecting on this pair, price broke below. What I'm still expecting for it to play out, SBR. So if I mark this, see 0. Okay, I'm expecting for price to stay come to this 0.6 and sell from here. And on lower time frame, there's a lower time frame confirmation. I'm going to go to I think 1 hour. I'm going to go to 1 hour and mark it. So let me remove this. Just let me go to 1 hour. That place we sell. So if you are to use SBI 1 hour confirmation, this is why this one can be a little bit complicated. The 4 hour own is very simple and easy to understand. I will talk about SBI sweep. If you want to stay confirm on 1 hour, sweep. So 1 hour, you want to confirm sweep, break, and inducement. This is break, not just break, it broke all these lows. So let's see, massive break of structure. Yeah, a massive break of structure. So in that pair, that place will react. It will not just because this is 25 expect structure. If it is VIS 50, it can go there and just do whatever it like. But VIS 25 respect structure. And it's my best pair. This pair EU, GU, they respect structure. It broke the low And I like for this SBI, I want you to break the low. All these ones. Okay, yeah. Can you hear me? Can you hear me?
Yes, we can.
These ones are change of market, change of character. I don't want to mark change of character. I want to mark the break of structure. So this main rule that was broken, if you watch that video where that's talked about, because this is the strategy that that's trace, you see, he wants it to break the main rule. And this is the disruption that Savige talks about. This one that did the sweep is a disruption. It means that price should not take it out. And price, of course, that place is the 4 hours is the 0.6 zone. The disruption of order flow, it is called off. It means if price takes it out, it will lead to disruption of order flow that market will no longer sell, it will buy. Of course, your stop loss based on 4 hours should even be above. So market will not take it. We are seeing extra confirmation on 4 hours on 1 hour on lower time frame to show us that market will sell when it comes here. And this is the inducement. And that we call it structural liquidity, but let me just keep it simple and call it I'll call it liquidity inducement. Why is it inducement? Why did I mark inducement there? Idea. Because from the first break of structure here, it must be beyond the 50%. So if you mark the Fibonacci, the inducement must be beyond the 50% to be valid. It must not be below it. This is the first break of structure here. The first break of structure here in 1 hour. The inducement must be beyond the liquidity must be beyond the 50%. It should not be. It's still the same thing I said in 4 hours. That is where price should pull back to for it to be valid. Must be beyond the 50%. It must be at 0.6. So inducement must be at 0.6, 0.7. From 0.5 and up, if it is at 0.5, it's okay. If it's at 0.5, it's okay. But if it is less than 0.5, then it's not inducement. It's not inducement. So it means that place has not given you inducement. It means that market will take out your dove. Market will take out your dove if the inducement is below 0.5 of your Fibonacci. This market will take out your dove. It means that your dove is the liquidity. But if it is at 5.0, 0.5 or above it for sell, if it's above it, fine. For buy, if it is below it, fine. So this is inducement. That's why I marked it there. So remove this. This is inducement. So what am I expecting? I'm expecting. So of course for lower time frame, if you get this kind of confirmation, SBI confirmation, you can put your stop loss above here. Lower time frame confirmations are not ideal, but it's for you to reduce your SL, and you can just target 1:3. Market will give you, if this market will buy, it will first of all give you 1:3 before it start buying. So all the cells here are just they are not the real cell. They are not the real cell. So let me go back. So let me remove all of
So,
this.
sir, can we ask a question?
Yeah, let me go back. Let me remove this and go back to them. So let's focus on the what we are. We'll come back to this one, this lower time frame stuff. So what I like about this setup here, I remember people posting that market will buy. Someone even told me that market is bullish. I just kept quiet because I don't want to argue with anybody. What did market do here? I did a liquidity grab. Came here and did not do it. That's why I say even both on forex anywhere, did not do it here. The red candle did not sweep. That's why price bought again. It's exactly like what happened on USD JPY. It did it here, swept it here, and broke all the rules. It broke all the rules here, giving us SBR. SBR. The SBR is for the sell and RBS is for the buy. And so you mark your range. So this is the range. Price came to 0.8, tapped it and sold. Look at what price did. He sold and got to the target. The moment he got to the target, he started buying again. He started buying. The moment he got to the target, he started buying. He came to that target. Even here, he did it. He did it again. If you have to look at here, he did a liquidity sweep, broke this low, came, pulled back, and sold again. It was part of the sell. Then here, he did do a liquidity grab here. Yes, he did. He swept it slow. And if you want to know if he sweeps it low like this, and you want to make sure that price actually swept that place, you can go to 2 hours to confirm. So let's see. If you go to 2 hours, you see that that wick is not a small wick. That is actually a huge wick. So you can see there's this wick. And 2 hours give you the same structure, broke the low, but I don't want to mark it on 2 hours. So let's go back to 4 hours. So he swept it, he broke this low. So if you have to use that, if you have to use the range, this is the Fibonacci. This is the low. Price came to 0.7 and sold to this target. In fact, it kept selling. So, all right, ask your question.
So, can I ask my question?
Yes.
Good evening.
Good evening,
sir.
Good evening.
The recent market price action you marked for this VIX25, the recent one. I don't know if you can go there.
Okay.
The SBR you marked there.
Yeah.
The recent
Okay, talking about this, the one here, the one I marked here.
Like you marked it from this down leg to the upper leg. Like from this low to the left to the high up.
Okay,
making it our SBR. So I was asking, so we should ignore, what form a key level is.
Okay, yes, you should ignore this one.
And the invalidation.
Okay, let me also point something out. Some people may think that this is the range. There was no liquidity grab here. So making this the protected zone. So this is not a protected zone, making this protected zone. If you and this is the correct range, not this one. If there was a liquidity grab here, this place would have been protected. But even though this place was not protected, even though this is a B setup, you see that it still played out. So because price broke this low, and it still came to, so this is very powerful. It still came to 0.6 and sold. That was why the sell has happened. There's an SBI here. Of course, the B setups work. It's just that I don't use them. But risk takers, they use them. So even though there was no no aggressive, no liquidity grab here, broke this low and came to 0.6, and that's why the sell happened. That's why the sell has been happening. And there's a 5 minutes SBI here. I don't want to confuse you guys with SBI. Let's just keep it simple. So there's a sell that will still happen here. Yes.
Yeah,
all right, another question.
The SBI.
Another question. Any other question?
I still have, in case somebody have.
Does any other person have a question? Okay, you guys on that. Of course, it's very simple. Okay, ask. Okay.
Okay. Of course, the market structure sometimes, I don't know which time frame we can effectively use to mark out the market structure. I mean, if you're on 1 hour, like you said, the market is dynamic. So, but we have to first figure out the market, the current trend of the market. But at a particular point in time, should in case that point in time, it is when we might want to take a trade that the market might shift strong. How do we tend to, avert such loss at that point?
All right, thank you for asking that question. I said it in the channel. 4 hours is the only time frame. It's the best time frame for confirming RBS and SBR structure. 4 hour is the time frame you should use to confirm structure, not 1 hour. Why use 1 hour when 1 hour is inside 4 hours? What if an RBS happens on 1 hour, but the 4 hour time frame is incomplete? The 4 hour has not closed. Anything can happen. The 4 hour may close with a week and not a body, making your RBS setup on 1 hour invalid. And if price comes there, price will take you out. So what is not complete, whatever you mark when the 4 hour candle has not closed is invalid, can be invalid. It may play out, it may give you some wins, but so Astris even said the same thing on Twitter. Said that he used to mark instruction on 1 hour, but now he marks them on 4 hours. And of course, Astris takes his trade on 50% when RBS or SBR has occurred. But 50% is equilibrium. It's not, you should sell from premium, which is from above 0.5, above 50%, and you should buy from discount zone, which is below the equilibrium, below the 0.5, which is still, if you flip it to the other side, it's still 0.6, 0.7. So the 4 hour time frame is very, very important because of several reasons. Number one is the intersection of institutional intent. Shows you exactly what the intention of the market makers, the intention of the market. It has a repeatable structure. The structure is valid. Whatever is confirmed on 4 hours is valid. Whatever is confirmed on 4 hour changes the trend. 1 hour does not change the trend. 1 hour does not change the trend. But 4 hour, if it happens on 4 hour, changes the trend. And RBS and SBR are not patterns. They are statements of control of the market. So once you learn this thing, you will know how to wait for price to come to you. And when price comes to you, you take your trade. Aisha, all right, answer. Ask your question.
Okay, good evening. So it's not like a question. I just wanted to clarify something. So basically, once we get into the markets, the first thing you should be looking at is the current trend of the markets.
Which is the current structure. Yes.
Then check for your RBS or
SBR on 4 hours.
Then you wait for on 4 hours.
Yeah.
Then you wait for retracement to
your zone
0.6 or 0.7 upward.
Yes. And your SL should be above that range. Your SL
should be above the range.
Yes.
Okay, thank you very much.
You're welcome. Price comes there because there is always a fair value gap there, or an imbalance, or an unmitigated other block. If price does not come there and it sells, no problem, leave it. But if price comes there, that is a true, if it is in a sell market, that's a true lower high, because in a bearish market, it's creating lower high and lower high, lower low. If it creates a lower low, which is the RBS, it's going to create a lower high. It's going to go to, the main sell, it will buy to lower high. It will tap all that lower high, which is, and lower high should not be 0.5. Lower high should be from 0.6, 0.7. It should pick up that lower high and go down to lower low to create a new lower low. If it is for buy creates a buy market, a bullish market creates higher low, higher high, higher low, higher high, higher low, higher high. So when it creates a higher high by doing RBS, it's going to come to higher low. The higher low is not the middle, which is 0.5. It's below 0.5. It's the 0.6, 0.7. That's the true higher low. From the higher low, it picks order and goes up to break that the higher high it forms. If it doesn't break it, it may touch it with a wick and just trend there. But if it touches it, you come out. So that is actually how the market moves. That's how the market moves. But don't chase price. The mistake people do is that they chase price. Once there's a breakout, they enter. I see people that once there's an RBS on 1 hour, they enter. That RBS on 1 hour has not been confirmed on 4 hours. Of course, it plays out, it may play out. It has not been confirmed on 4 hours. It will not go far. 4 hour may end with a wick, not a body break, and maybe you are confirming buy. But if 4 hour ends with a wick, it means the market is selling. If it is a bearish market on 4 hours, market is selling. Meanwhile, 1 hour confirmed with a body, and gave you a little buy. But 4-hour confirmed with a wick, meaning that it did not do RBS. It did not do RBS. Market is still selling. So, basically you are trading counter. And counter is risky. You should trade with structure. You should trade with structure. Market breaks, if it is buy, market breaks above, you wait to buy at higher low. You buy at higher low and you sell at lower high. Buy at higher low, sell at lower high. So, and where is lower high? This shows you exactly where the lower high will be and shows you exactly where the higher low will be. So that's basically a structure range POI. You mark your structure, know the current bias of the market. You mark your structure. You mark once RBS, SBR forms on 4 hours. You mark the range. Sometimes you may think that price has not come to you. It may be that the range has not fully formed. Mark the range. Once the range has formed, you know the high of the range, the low of the range, and you wait for price to come. If it is, to your zone, and then that your zone is the POI, your point of interest. That is where price is coming there because there's an imbalance there. There's a fair value gap. There is an unmitigated order block that is there that price will have to mitigate. And once price mitigates it, it will start going to the direction that you want it to go to. That's it. Another question.
Yes, I have a question.
All right.
So it's been said that like Sabike said, you buy yourself from internal to external. So I don't know, does that concept really apply to
No.
working on
This one is 4 hours is external. 4 hours is that one is for lower time frame stuff.
Okay.
So when we come to SBI lower time frame, which is on Monday, we'll talk about it. That you buy from basically you buy from it's still almost like in 15 minutes. Let's say you price comes to 0.6, you go to 15 minutes to confirm it. Go to 15 minutes to confirm it. Then you see that liquidity graph on 15 minutes or 10 minutes, you enter your trade there. Your target, if it is for buy, should not be the 15 minutes high. Your target should still be the 4 hours high. You understand? So from that's what people mean by buying from internal to external. Your target is not the internal target. It's not the 15 minutes target. You can get to 15 minutes. Your target should still be the 4-hour target. 4 hours is the external. 4 hours is external. 15 minutes is internal. So that's it here. That's it. So do you understand it now? Yeah, and of course your SL should be on 4 hours. Your SL should be 4-hour SL, except you have a strong confirmation on that 15 minutes that can make you to lower your SL. But your SL is and your target is 4-hour target, the 4-hour objective target, and that's the external. That's also you if you enter on 15 minutes, you mark your structure on 4 hours. You should target you buy from 15 minutes, which is internal, to 4 hours, which is external. So 4 hour, the objective target is 4 hour. But of course, the best RR is 1:3. When price gives you 1:3, you can come out of the trade. All right, another question.
Yeah, sorry, I still have a question.
Okay.
So my question is now, when placing your trade, do you enter at current market price or you can set a limit order? And how do you want to apply it on these time frames in either of these entries?
Yes, we have conservative traders and we have aggressive traders. Aggressive traders, people like that are those that when price comes to that 0.6, 0.7, they just enter. As long as their stop loss is above the range, if it's for sale, their stop loss is above the range, they once they get their target, they come out. But conservative traders are those that will go to 15 minutes and wait for, when price comes to that zone and gives them liquidity grab on 15 minutes or 10 minutes, then that's when they enter and still target the 4-hour distance. So you can use 15 minutes for confirmation, for extra confirmation. So 15 minutes will give you the liquidity grab. 15 minutes, 10 minutes gives you the liquidity grab. You enter. Most people that confirm structure on 4-hour, they use 15 minutes for entry because 15 minutes is the correlation time frame of 4 hours. 15 minutes is the correlation. Whatever 15 minutes gives you aligns with what is whatever happens on 15 minutes aligns with what happens on 4 hours. What 15 minutes gives you aligns with what is happening on 4 hours. So that place where that rejection will happen, where you will enter a trade, 15 minutes will even confirm it. Once it gets there, on 15 minutes, you start seeing rejection. And that rejection candle is what will now, what you see. When you see it, you enter. All right. Another question.
So sorry, sir. So in a nutshell, like this, do you mean to say, for example, if you are not available on the chart, as at when the price happened, you could have placed a limit order on the 4-hour chart. I mean,
Yes,
without
yes. But I will advise that you build confidence. You can be using 15 minutes, 10 minutes for confirmation when price comes to your zone and place your trade until you have built confidence. You have built confidence, you've seen it play out several times, and you know the pair it works the most. You know the pair. Traders have pairs that they trade. There are some traders they trade a particular pair. Me, I trade a particular pair. So there are pairs that you see that it works the most and it miss all your confirmation. If you miss all your confirmation, there's a way. So the more you trade live accounts, I'm not talking about demo. The more you trade live accounts and you trade your strategy, you have your edge, the more confidence you become, the more your doubts will go. Because the people that are confident with their strategy, they can just enter aggressive. They can enter with limit order. But since you are learning it, you want to see how it plays out. You can, when it comes there, you go to 15 minutes, 10 minutes, it gives you that rejection candle, that liquidity grab, you enter. So you can, instead of setting a limit order, when you have gained more confidence in it, you can enter with limit orders. Yes. All right. Another question before we round up for today. Wow. 130. Any other question? Any other question? Okay, you guys understand. Is there anything that you don't understand? This is our last section on this. Is there anything you don't understand? Any other question?
No, so I don't think there will be, but I feel like for now we still need to like enter the market and
Yes.
go back and back test.
Go
So
and
when we
back
have
test.
questions,
Yes,
we'll come
yes.
to you.
Go and back.
Thank you very much.
Yes, go and back test. So this is
Thank you.
V10, broke above, equity grab. So go and back test. Go and back test. For any 1 hour video you watch, you should do back test for 4 hours or more. The more you back test, the more you will learn things on the market and form your age. You have your confirmations, form your age. The next section we'll have is on lower time frame, how to enter on lower time frame. That'll be on Monday, and then on Wednesday we're going to have risk management, and then I'm going to give you rules to follow that will help you stay profitable. Because even if you have the best strategy and you keep disobeying your rules, you can still fail. All right, you keep disobeying your rules, you can still fail. And then after that, on Saturday, we are going to we'll do a weekly review, look at some forex pairs, look at how they perform during the week, and point out how they perform during the next week. And then after that, we'll be reviewing trades, past trades, and some of my trades, so that you see how I think and how I approach some of those setups. All right. Thank you all for joining us. It was really cool.
Thank you, sir, for your time.
Yeah. See you later.